Good morning this Wednesday, the 15th of November. I'm Grady Wolfe, market analyst with Bell Direct. Wall Street's recent rally extended into Tuesday's session as investors welcomed the latest inflation data that came in at an annual rate of 3.2%, which was below economists' expectations of 3.3% and raises investor hopes that the Fed's rate hike campaign is coming to an end. The Dow Jones rose 1.7%, the S&P 500 added 2.1%, and the tech-heavy Nasdaq jumped 2.5% on Tuesday. The 10-year US Treasury Yield also tumbled below 4.5% following the release of soft inflation report. Banks, including Bank of America and Wells Fargo, rallied on hopes that the US economy could avoid a recession altogether. Home Depot shares lifted at nearly 6% on Tuesday following the release of better-than-expected third-quarter earnings results. Over in Europe, markets also welcomed the cooler-than-expected US inflation data as markets in the region closed higher on Tuesday. The Stock 600 rose 1.4%, led by retail stocks rising 3.1%, while oil and gas stocks fell 0.2%. Germany's DAX rose 1.76% on Tuesday, the French CAC added 1.4%, and in the UK, the FTSE 100 lifted 0.2%. Locally yesterday, the ASX closed 0.83% higher despite the release of Westpac consumer confidence data for November and NAB business confidence data for October, both showing declines against economists' expectations of respective rises. NAB business confidence data for October fell a further 2 points despite business conditions actually edging up, driven by higher sales and profitability while employment eased. This reading indicates businesses remain cautious despite the resilience we are seeing in business conditions. Westpac consumer confidence data for November also fell 2.6% in data out yesterday to 79.9 points, indicating consumers are pessimistic following the RBA's latest rate hike for November, placing additional financial pressures on Aussie households. Energy stocks did most of the heavy lifting on Tuesday, with the sector closing 2.54% higher, boosted by Beach Energy rising 5.6%. The Commonwealth Bank of Australia rallied just shy of 1% on Tuesday after Australia's largest bank released a first quarter trading update, including unaudited statutory NPAT up 1% on the PCP to $2.5 billion. Operating income was flat though for CBA, and operating expenses were up 3%, reflecting higher costs from wage inflation and higher amortisation. Big bank earnings over the last few weeks have indicated strength and resilience by the Big Four in FY23 and the start of FY24, with revenues boosted by rising interest rates and the peak of respective net interest margins. Multiple signs, though, have suggested that future revenue and earnings are likely to ease, including slowing mortgage and business credit growth across the board, rising operating costs due to inflation, higher switching by customers between all accessible banks, both big and small, and the net interest margin peaking during FY23. On the commodities front this morning, oil is trading 0.74% higher at $78.83 a barrel. Gold is up 0.85% at $1,962 an ounce, and iron ore is flat at $130.50 a tonne. One Aussie dollar is buying 65 US cents, 97.87 Japanese yen, 52.03 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open the midweek session up 1.35%, following the strong rally on global markets overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Chalice Mining from $7.10 to $5.40 and maintained a speculative buy rating on the exploration company following the release of an update from ongoing hydrometallurgical test work programs the company has been undertaking for its 100% owned Gonaville deposit. The results demonstrate the potential for higher recoveries to be achieved compared with those assumed in the scoping study released in August this year. The decline in price target is due to lower palladium and platinum price forecast, given the palladium spot price is currently at a 5-year low. And Trading Central has identified a bullish signal on Grange Resources following the formation of a pattern over a period of 57 days, which is roughly the same amount of time the share price may rise from the close of 52 cents to the range of 59 to 61 cents, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful Wednesday, and as always, happy investing.